Silver, as of this recording, is up 175% year over year. 175%. What in the world is going on? I'm excited to talk to you all today a bit more about this precious metal that we've hinted about several times on the podcast, but let's dive into it today. And I look forward to dissecting what is happening in the precious metals markets.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis, ready to unlock the keys to a life of true abundance. We're diving into everything from financial freedom and optimal health to meaningful relationships, geographic freedom, and everything in between. It's about creating a life rich in experiences, purpose, and joy. Get ready for empowering conversations, expert insights, and real-life stories that inspire you to live abundantly. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
All right, welcome to 2026 and almost to season 3 of the Secrets to Abundant Living podcast. I'm excited to see you all here in the new year. Gosh, yes, what a time. What a time. I hope you had a great holiday season. You're probably back in the saddle, getting your new year off to, fingers crossed, an abundant start. But for those of y'all who don't know me and are new to the podcast, my name is Amy Sylvis. I am the founder and CEO of Sylvis Capital. We connect investors to hands-off income. And hey, you can probably all say this in your sleep now, but we believe that true abundance comes from being able to do what you want, when you want, where you want, with whom you want, for however long you want. And very often those freedoms come from having income that is not tied to trading our time. So hands-off income. And yeah, so we invest in real estate, but hey, personally, I also invest in gold and silver bullion, not the paper representations, but the actual physical metals. And from time to time, we like to check in and kind of see what's going on in that space. But hey, before we get started, as you all know, none of this is investment advice. I'm not telling you how to invest. I'm simply talking about what I do with my portfolio and also giving you all education in the space. So as we mentioned, silver is now up 175% as of this recording. By the time this goes live, it might be a different picture, but either way, quite an incredible run. So what in the world is happening in the silver market specifically? We talk usually about gold and silver, but this time I want to speak a little bit about silver, and sometimes gold and silver are inextricably linked, but silver's had a bit more of a run this year. So what is happening? Well, as you all know, gold and silver hit the true definitions of money, right? Do you all remember from previous episodes what the definition of money is? I'll give you a second. Okay, if you don't know, it is a medium of exchange. It's a unit of account. It's portable, durable, divisible, fungible, and it maintains a store of value over long periods of time. So, spoiler alert, the dollar, the euro, the yen, the renminbi, none of those fit the definition of money. They are not stores of value over long periods of time. In fact, they're called fiat currencies, and all fiat currencies throughout history have always gone to zero. And hey, the United States dollar, as we know it, since it came to in existence in 1913 with the Federal Reserve, has lost, I think, close to 98% of its value last I checked. So the dollar is also not money. The only two things, items, objects on this planet that fit the definition of money are gold and silver. So some of us, that's enough to want to invest. But as you may know, currencies used to be backed by gold and silver. The dollar used to be backed by gold and silver. And Nixon unfortunately took us off the gold standard there. And it's important to recognize that these changes typically happen slowly and then all at once, which might be what we're seeing now. But all fiat currencies come to an end. The dollar is not going to be an exception. So here are a few things of what we might be seeing happening. The first is The Congressional Budget Office just let us know that the second largest expense of the United States government is what? Does anyone know? The second largest behind Social Security and disability? All right. It is interest on the national debt. That's big. More than Medicare and Medicaid, more than our national defense is the interest on the national debt. I'm not going to get into it too much, but for those who have studied monetary history, you will know that there's always going to be increasing interest on the national debt because every dollar that the United States has is borrowed into existence. So for every dollar that exists, there's interest due on that dollar. So this whole kind of smoke and mirrors of, oh, the debt ceiling and, oh, we must balance the budget and all of these things, the national debt's going to keep increasing. That is just part of it. If we were to pay down all of the national debt, all dollars would cease to exist. That's a debt-based monetary system. And that's what every currency is in the world right now. So what does this mean? Well, the interest on the national debt is going to keep increasing. We tried cutting, right? We tried cutting expenses. It's a tough thing. I'm not saying we should or shouldn't. This show is not political, but we tried doing it earlier this year. That didn't work. The national debt just keeps increasing because, again, anyone that knows monetary history and studies the system, this is just inevitable. The other thing to consider is the treasuries, right? That we owe interest on. About a third of those, they are maturing in 2026. A third. So a third of our national debt is maturing in 2026. So if you want to reduce the interest on the national debt, who wants to guess if you want to do that for a third of the outstanding debt, what might you do to decrease that? Ding, ding, ding. You might lower interest rates. Ooh. You might do that despite what current inflation is. You might do that despite where the economy is. And guess whose term is over in 2026? Jerome Powell. And guess what Trump is talking about? Again, this is not political. We're not going down that road, but Trump is talking about appointing someone who is going to lower interest rates. So what the heck does this have to do with gold and silver? Amy, you've been talking a lot about all this macro stuff. Well, hey, very often when interest rates are lowered, and by the way, as of December, the Fed is increasing the monetary supply. Ooh, it's increasing its balance sheet, reversing course from winding down its balance sheet. This is all inflationary. So when inflation gets higher, hard assets tend to do better. And silver, specifically gold as well, historically speaking, are the canary in the coal mine. So I think that that's probably a big signal that the market is giving us, that they're anticipating interest rates will go down more in 2026, maybe to refinance up to a third of our national debt to make the payments on the national debt a little bit lower. Will it help us? Will it save us? Will it save the dollars? All of this going to be just fine once Trump appoints someone who cuts interest? No, no, no. It's already written, right? The writing is already on the wall. We may be able to postpone and kind of zig and zag a little bit here and there, but yeah, this is the story. We already know how this ends. So that may be one reason why gold and silver are going higher. There are a whole bunch of other interesting things like China, creating export restrictions on silver that we're not going to get into on the show, but you can look at it if you're interested. There's also, this idea that gold is mined and then buried, right? It goes in vaults. Maybe it's worn as jewelry, but the vast majority of gold is just kind of dug up from the ground and mined and then put back in the ground for storage. Silver is not only a monetary metal, but silver is also used in electronics, photovoltaic cells, all sorts of uses for silver. So it's mined. Well, yes, it's mined. And then some of it's stored, but some of it's used as well. So that increases demand for it in addition to kind of its tried and true monetary purpose. What if you could keep investing in real estate, but without California's landlord laws, rent control, and endless uncertainty? What if you could sell your California property and defer taxes legally? And what if you don't have to do it all alone, but by investing alongside experienced operators in commercial real estate? On January 21st, I'm hosting a free virtual event called the Get Out of California Summit. It's designed for investors who want better markets, better laws, and great returns. If you've ever wondered what investing outside of California looks like, this summit will open your eyes. Register for free today at getoutofcasummit.com. That's getoutofcasummit.com. We'll put the link in the show notes. We can't wait to see you then. Really interesting. Here's the other way there's speculation that the government might deal with the national debt. I'm sure you all have heard of Fort Knox, and you know that the United States has the largest gold reserves of any country. And there are some countries like Russia and China that don't necessarily, give their holdings, or some people think that they kind of hold back, or they underestimate, or they don't give accurate representations. But officially speaking, the United States has the most gold. Do you know what price the United States has gold valued on its books? Does anyone know? A lot of audience participation here, right? I'm just talking to my screen as I record this podcast. I can't hear you all, but you better be participating in your cars or at the gym or wherever you're listening to this. What is the value of gold on the books for the United States? If you guessed $42.44, you are right. That's the amount where gold is valued on the books for the United States government. All of the holdings. Guess what today's price is? Spot price. $4,533 compared to $42.44. Little bit of a discrepancy there, right? Just a little bit. What would happen? I'm not saying this is going to happen, but what would happen if the United States suddenly revised the value of gold that the United States government owns on its books to bring it up to market? What would happen? Would we be able to pay down some of our national debt? I don't know. Some people are speculating that that might happen. Why hasn't the government revalued gold, the price of gold on its books? Something to think about. I would argue that it's in the best interest of central banks to have citizens not pay much attention to real money, right? Oh, it's a barbarous relic. Oh, it's something from the past. Focus on Bitcoin. That's way sexier. That's way more interesting. Oh, the dollar's fine. The dollar's the world's reserve currency, the petrodollar, right? It's just this low value, uninteresting thing. Central banks have a lot more control. That's a whole rabbit hole, right? That's a whole other rabbit hole we can't get into on this podcast. But historically, the gold silver ratio is 1-8. So currently, the gold silver ratio is 1-60. Or I should say 60-1. I got that in reverse. The gold silver ratio is 60-1 as of today. What happens if gold is revalued up from $42 to $4,000? The United States no longer has a strategic stockpile of silver that we know of. But historically, the government has set the price of gold and silver before we were taken off the gold standard. So might silver be revalued? I don't know. This is another tinfoil hat episode. But anyway, I just wanted to give you all a little bit of insight, some things that might be going on. So one of my business partners who you may know, Bruce Frazier, posts on LinkedIn a lot, and he says, position yourself accordingly. For me, not financial advice for you. Please don't ever follow what I'm talking about. I'm just talking about what I'm doing, just some Amy musings here. But what I'm thinking through is the fact that, is there going to be higher inflation coming up? Likely, in my humble opinion. I mean, that's monetary history as well. The further into the past you study and look, the further into the future you can see. Interest rates, I think, are likely going to be lower. Maybe. At least that's what Trump's saying. It makes sense when dealing with a large percent of the national debt that's coming to maturity in 2026 to refinance at a lower rate. So what does that mean? Higher inflation, typically hard assets, historically speaking, do much better. So I'm, of course, still buying real estate. We just closed on close to 500 units in Tulsa and Oklahoma City with our investors. And then obviously commodities and precious metals tend to do well as well. Will they? Hey, I don't have a crystal ball. My crystal ball is, only as good as what I've studied, what past tells us. That allows us to predict the future a little bit better, but none of us truly, truly knows what's around the corner. But I do share this because I don't, you know, there's this interesting thing, and our investors learn this, and we talk about this on LinkedIn a lot when we post every day, that very often the financial system kind of teaches us and recommends to us assets that they can make money off of, right? Stocks, bonds, mutual funds, much more easy for the financial sector to make, to get their cut, to earn commission, make money off of what we invest in. If we're doing private lending, if we're investing in private equity, if we're investing in real estate, sometimes commodities, not the paper representations of commodities, but actual commodities, actual gold and silver, not paper representations, that can be something that's tougher for folks to make money off of us. So perhaps we're not told about these assets as much. And I'm not saying you should buy them. I'm not saying you should invest in them. Do not listen to me. But I do want to educate you, because the moment that you have information about an asset class, and this is just scratching the surface, right? I invite you to study quite a bit more on your own, but your knowledge allows you to decide what's best for your risk tolerance, your time horizon, and of course, your financial goals. So, a couple of resources, you've heard me talk about these before, but if you've missed them, now is the time. The Creature from Jekyll Island. It is a book by G. Edward Griffin talking about monetary history, and specifically the history of the Federal Reserve that is not federal and does not have reserves. It is a large book. It's a long book. It starts off slow, but I promise it will be one of the best books you will ever read in your life. No joke. It's a good one. I say this to everybody. I hold book clubs from time to time where we study that with other folks, and they all agree. So get your hand on that. Mike Maloney, he authors a book about gold and silver. He has it for free on his website. So you can go to goldsilver.com, go to the free resources there, and you can get the PDF. You could also buy it on Amazon. But two incredibly powerful books if you want to understand what may be coming up by studying history and getting education there. All right. Thanks for joining for this episode. Really excited to give you all, just updates on what's going on, some of the considerations around why what's going on might be going on. Do us a favor. If you found this episode helpful, please share it with one friend. We'd be really grateful. We're always looking to grow, add value, and help people. So thank you so much. Looking forward to an incredible 2026 with you all. Bye for now. If you own real estate in California, you already know that the rules are stacked against you, and it's getting worse. 9-month evictions, rent control, laws that protect everyone except you as the landlord. What if I told you that there are other states where landlords still have rights, job growth is strong, and people are actually moving in and not out? On January 21st, I'm hosting a free virtual event called the Get Out of California Summit. You'll learn how investors are safely moving capital out of California, reducing taxes through 1031 exchanges and cost segregation, and even partnering with experienced real estate operators to invest in commercial real estate, all without doing it alone. If you're tired of fighting the system, this summit is for you. Register for free today at getoutofcasummit.com. That's getoutofca, like for California, summit.com. The link is in the show notes. Make sure to register today, and we look forward to seeing you then.